Okay? The reason that you, and you may need to show, mute your mic. Okay. And the reason for that is because you have a reticular activating system and you tell it what's important. There's a reason that you driving down the road, anybody's been driving down the road on a long trip and all of a sudden you like wake up and you're like, oh, holy smokes, I can't believe I've been driving for 20 minutes and I've just, just kind of been on autopilot as I'm driving. Well, that's because you've trained your reticular activating system to look for dangers in the road. Now, if a car had jutted out in front of you, then it would have instantly caused you to wake up out of that and your reticular activating system would have gone into overdrive. Well, what we're doing on the chart, if we take that whole process back to the chart, what we're doing on the chart is we are training our eye to recognize movement in the chart. And it doesn't matter where we start. It doesn't matter whether we use one swing high or another swing high. If you want to know the safest way to do it, you do exactly what Akil just did on his chart. You scrunch up your chart as tight as you can get it. And then you take the major swings and you draw the major swings. Okay? And you draw those major swings. Swing high, swing low, swing high, swing low.
All right. So let's talk. You should have a good grasp right now. And of course, you need to go back and practice this. Hopefully, you're writing this down and going to see the recording later. But you should have a good grasp of how the market moves when it's trending. If I can lock this thing. There we go. There we go. The market. Let's draw these on. New structure high, outside return. New structure high, outside return, new structure high. Now the next thing we want to talk about is structure. What are structure levels? And you guys should know structure as support, resistance. Every time the market creates a new structure high and an outside return, we're creating a level of structure. So as the market does this, as the market moves up, giving us our impulse leg, as we get this outside return, this initial structure high, this is going to become a level of structure. So as the market pushes back up to retest that level, we call this retesting a structure level, or in this case, testing a resistance level. And as you're not going to be too concerned with this right now, but as you move on in your trading career and you decide whether you want to be a trend continuation trader or a counter trend trader, these structure levels are going to become very important to you. And what happens is once the market gives us our higher high, higher close and creates our new structure high, this level, which was once resistance, now becomes support. And when you look on a price chart, when we get that next outside return, it usually comes into this structure level, into this previous structure level. Again, look left, structure leaves clues. Structure, it acts like a magnet. Support and resistance level, price action wants to gravitate towards it. Price action wants to go there. So a good indicator when you're going to make a prediction of where the outside return is going to go to is to look left on your chart, draw a line out, and look for that previous level of structure. Now, I'm not saying just go out there on the charts and trade them right away. Don't just start picking out structure levels and putting limit orders there. You'll get eaten alive doing that. But we start making prediction of hey, where is the market most likely to go? And then we'll use more of our tools, including Fibonacci's and some simple candlestick formations to determine if this is going to be a high probability trade or not. And a great example was the euro-yen trade we talked about earlier. It came into a structure level. We predicted where the market was going to go, but I didn't just sell right away. I had to wait for confirmation. I had to make sure it just wasn't a regular trading opportunity. I had to make sure it was a high probability trading opportunity because those are the only type of trades I want to involve myself in. I don't want to be the risky cowboy gambling trader that just puts orders here and puts orders there. I want to wait for that